Welcome back. And I mean, if you hear a rumbling noise at the back, that is just the new, you know what, we've got national flowers and national trees. You know what is the new national sound that we've got? We call it the sound of a generator. So that's what you hear at the background. That's the new national sound, and we call it a generator. So guys, let's carry on. Thank you for all your requests. Thank you for watching the show. And of course, Arcellor Mittal is next on our line. And this viewer say, Frans, but please, I want to buy the share. Because maybe bought it before. But first of all, I want to tell you that there is a beautiful falling wedge in the making here on the weekly chart. And I like the chart, but I will show you something else now. But let's do the positives first. The positive will be that this falling wedge will break to the upside above 492. Okay? Then it can break up and it can go up to about 610 on the falling wedge if it plays out. But what do we see? Below the 40-week moving average. That's of course negative. That makes me nervous about the share. And I mean, if we go below 424, that's by the way our stop loss if you do buy it above that. So 424 your stop loss, your target above 6 Rand, and I hope that it plays out. But what worries me is the following. Can you believe it? That this share is sitting with a very, very bad head and shoulder formation. I just want to show you there. There you are. And by the way, if you draw in a head and shoulder formation, always find a place where you can have a proper neckline. Now, what do we see here? There's the point where it broke up. It came back to test the neckline. Then it has a beautiful head. There's another beautiful place where it reached the neckline. Back again. And what I don't like is, can you see that we're starting to consolidate below this neckline? And this neckline sits at 4.70 Rand. Below 4.70, unfortunately, this chart doesn't look well. And because I'm saying that this is a head and shoulder, and where can it go to? I mean, I don't even want to show you. The conservative target is okay, because the conservative target can maybe take it down to, there you are, 396. But look at the target if it plays out to the downside. From there, there's the head to the neckline, and if you project it to the downside, there you are. Let's see where it can take you to. It can take you to 1 Rand and 42 cents. Now, this is a share that rallied from well below a Rand, and it went up all the way, almost you can say, to about 11 Rand. Say for instance, you did buy the share below a Rand, and it rallied to above 10 Rand and you didn't take your profit. What happened? It's now at 441. So that just tells you that I always believe if you are invested in a share, you need to watch it. And if you are happy with your profit, just take it. I've, in my life, took many profits. And sometimes I'm way too early to take a profit. And I'm happy with my tiny little profit. And then the following day, the share runs away. And I say, but Frans, you are stupid. You're never stupid to take a profit. You always look at your bank balance and it ticks higher. And while you're doing that, you accumulate capital. And by doing that, you can never be wiped out of the market. So always take the easy money. Don't be afraid to lock in your profit unless you buy the share for a very long term and you're happy with the management and the business model. Then it's a different story. Let us look at Harmony Gold Mine. I mean, this was one of the dogs of the market just a few days ago. Not even a week or 2 weeks ago, a few days ago. Because can you remember that Harmony at its heyday traded at levels close to 127? Can you believe that? I mean, they did well, the company printed money, the gold price was nice, everything worked well. But then suddenly the share was hammered. And look at this waterfall formation, selling, 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 a little bit of a blip all the way to the downside again, negative, negative, negative. But what usually happens with a waterfall formation, you either see a beautiful V reversal, that sometimes it's quite a normal pattern to see after a sell-off and you get a V formation, Or on the other hand, you get a falling wedge, and now we're sitting on a falling wedge situation here. There you are. If the share can break above, and then remember this is a weekly chart, and if the share can close on Friday above 47.45, then you know that the momentum wants to pick up and the share can maybe go higher. And where's my target? There's a tiny little gap there on the weekly chart. That gap sits between 52.50 and it will close at 52.94. So if you do buy it above that resistance line, make use of a stop loss of 33.20 or 33.15, and then that little gap there right at the top is maybe not a bad place to maybe lock in your profit. But why don't I put in a 40-week moving average here? There's quite a simple solution or answer for that, and that is on a share like Harmony, and many commodity shares are in that camp. They are so volatile that it doesn't help you to put in a 40-week moving average, because it sometimes mess you around that 40-week moving average. I always see gold shares, or let's say commodity shares, as almost, you can say, shares that you trade in. It's not really for the long term. But I mean, if you do buy a share like Anglo Gold, maybe at rock bottom, and you just hold on. I mean, look at Thungela, what happened. Thungela went up, had paid out a beautiful dividend, and a lot of people have that for the long term. But while the gold price is going to do well, Thungela will also do well. And the same with the gold. They will always do well, but if something goes wrong, they get sold off. And here you can see, sold off from 88 Rand to, let's call it 35 Rand in a matter of a few weeks. Do you really want that in a long-term portfolio? I really don't think so. I can remember we looked at PayPal a while back, and I mean, the share price looked okay, and this is a weekly chart once again, and I want to put in a moving average here, because here we can maybe look at the 40-week moving average again. That can give us some nice guidelines here. I just want to get it quickly up there. 40-week moving average. By the way, we know by now that the 40-week moving average is it's a long-term moving average that a lot of people use. Most of the big fundamental managers, they use it, they like it. And there you are. There's the 40-week moving average. You can see it's a clear line. I just want to make it a little bit clearer, maybe, if I can. If you've got there you are. Let's see if I can quickly do that, because we haven't got time. Oh yes, there you are. There you are. Okay. Well, I must say okay. Then my time is going up. I mean, there's the 40-week moving average. I just want to get it there. There you are. 40-week moving average is sitting at 101.10, and it's trading now at 87. And I mean, we've got a beautiful rounding bottom here. And what I maybe see, what we're coming to get into play here, is we're starting to work on an inverse head and shoulder. There's the left shoulder. There's the head. There's the right shoulder. And I think within a week or two, this 40-week moving average will be exactly at that point of the neckline. And that I do like, because if it does turn around there and it starts to consolidate above the 40-week moving average after such a sell-off that we've seen here, that means that the share can easily turn around and give us a beautiful rally to the top. But where's that neckline and where's that 40-week moving average? That is sitting, and I'm going to play devil's advocate now. I'm going to say we're going to wait for this 40-week moving average to get there, and that will be at 97.30. So buy above 97.30. You believe in this right shoulder. Your stop loss will be 83.80. And my target, let's give you the target. I mean, the first one will probably be 108.92. That's the conservative one. But let's look at the full target. If it plays out to the top. And there you are. It can maybe go to 137.23. And remember, this is a wonderful, massive company. And I think if things can turn around here, it will probably be good for them. And let's look at Deutsche Bank. I mean, there's two shares in the market at the moment that worries a lot. Investors are worried about them. Is Deutsche Bank and Credit Suisse. And I hope I can have time to cover both of them. And can you remember, some of you, maybe, I hope some of you will remember that, in 2008, Lehman Brothers went bankrupt. And their share prices did almost exactly what these share prices are doing. They just kept losing all the way momentum to the downside. I mean, this is a weekly chart. It was, and that was in 2011. This company was worth $67. Now it's trading at $7.53. Now I know some people will say to me, Frans, they offer value. But what is the golden rule here? The golden rule is if there's rumors about a company that has maybe problems either financially or something wrong, or there's maybe something in the audits that's not right or whatever, or you don't understand it and you just hear these rumors. The best advice that I can give you, I cannot give you financial advice, but what I can give you advice, what I've seen in the markets over years. And that is, when you hear those rumors, my advice is not to buy them, is to wait until there's some news out that say the company's okay. Even if you lose the first 15-20% rally in these shares, don't chase them. Don't hope that they will turn around, because yes, you will say, Frans, look at that beautiful sell-off resistance line is close to break. You will say, yes, I also see a falling wedge. That is positive, Frans. I want to buy it. My simple advice is, I can mention a few companies. Capitec was one of them. People talked about that. That turned sour. They went under. Steinhoff was one of those companies. When it started to fall, it came out. People bought it and lost a lot of money. So please, if you hear rumors like that, don't buy those shares. Maybe I'm an old man, but I'm a wise man. I've learned those lessons. So thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.